The shifting global financial landscape, China's impact on the U.S. economy in recent years. China has made headlines for taking bold steps in reshaping its economic strategy. The most significant of these moves has been the gradual yet steady sell-off of its U.S. Treasury holdings. This isn't a random fluctuation in global markets, it's a strategic pivot that could alter the balance of global finance in ways we might not fully comprehend yet. The question arises, what does this massive shift mean for the future of the U.S. economy and its position as a global financial powerhouse? China's strategic move. China's decision to sell off its U.S. Treasury bonds marks a profound shift in its economic strategy. For decades, China was the largest foreign holder of U.S. debt, using these bonds as a tool to manage its surplus trade revenues. This was part of a carefully constructed strategy to invest surplus capital in what was considered the safest investment in the world, U.S. Treasury securities. However, in recent years, this strategy has begun to unravel, raising questions about what comes next for both China and the U.S. on the global stage. Why is China deciding to take this drastic step now? The reasons are both financial and geopolitical, and understanding them requires insight into the dynamics of U.S. Treasury bonds. For China, these bonds were seen as a safe haven, a method of placing its trade surpluses in secure, interest-generating assets. But that era seems to be coming to a close, and the implications are huge. China's decision to offload these holdings signals a lack of trust in U.S. fiscal policies. The U.S. government is currently grappling with record deficits and rising inflationary pressures, making the idea of continuing to rely on Treasury bonds increasingly unappealing for China. More importantly, this move reflects China's growing desire to reduce its dependency on the U.S. financial system, a system that it now views as increasingly unstable and vulnerable. A shift in global economic power. The consequences of China's actions extend far beyond the immediate financial impact on bond markets. U.S. Treasury bonds have long been considered the bedrock of the global financial system. They were a cornerstone of the dollar's dominance and the foundation upon which countries across the world built their foreign exchange reserves. But by selling off these bonds, China is sending a clear message to the world. It no longer sees itself as a subservient player in the global economic game. This shift isn't solely about financial markets, it's about global power dynamics. China is strategically diversifying its reserves, moving away from U.S. Treasury bonds and into assets like gold and investments within the BRICS coalition. This move, part of a broader strategy, signals China's desire to build an alternative financial system that doesn't rely on the U.S. dollar. The move to diversify away from the dollar is especially significant because the U.S. has long used the dollar as a geopolitical tool, leveraging its currency for sanctions and to influence global markets. If countries like China, Russia, and others successfully reduce their reliance on the dollar, the U.S. could lose this critical tool, further eroding its ability to dictate terms in global economic matters. The U.S. dollar under threat. The U.S. dollar has long been the dominant currency in global trade and finance. It is the most widely used currency for international trade, the backbone of global reserves, and a safe haven for investors during times of crisis. However, history shows that every dominant currency eventually loses its status. The question is whether the U.S. dollar is next. China's move to sell U.S. Treasury bonds is just one piece of a broader shift in global economic power. Countries like Russia and even smaller nations are increasingly seeking alternatives to the dollar, diversifying their reserves and trading in local currencies. This gradual move away from the dollar is part of a larger trend toward a more multipolar global financial system, where the dollar no longer holds the same unchallenged position. While alternatives to the dollar, such as the euro or Chinese yuan, are growing in importance, they lack the same level of global trust and infrastructure that supports the dollar. Still, Cracks are beginning to form in the dollar's dominance. The more nations diversify their reserves, the weaker the dollar's hold becomes. The BRICS coalition and the rise of new financial systems. One of the key players in this emerging financial landscape is the BRICS coalition: Brazil, Russia, India, China, and South Africa. These nations are actively working to reduce their reliance on the dollar, exploring new ways to conduct trade and settle transactions outside of the U.S. financial system. The BRICS nations are even discussing the creation of a unified trading currency, which could potentially challenge the dollar's dominance in international trade. China's increasing investment in gold also plays a critical role in its strategy. Unlike fiat currencies, which are tied to the economic stability of a single nation, gold is an asset that holds intrinsic value and isn't subject to the economic policies of any one country. By accumulating gold, China is signaling its intention to move away from the dollar and toward a more stable, independent financial system. The U.S. response: can it adapt? For the U.S., this shift poses significant challenges. The country's financial system is deeply intertwined with the dominance of the dollar, and its geopolitical power has been greatly enhanced by its control over the world's primary reserve currency. But as China and other nations pull away from the dollar, the U.S. must contend with the loss of this crucial leverage. The immediate economic consequences are clear. Higher borrowing costs are one of the first impacts, as the sale of U.S. Treasury bonds drives down bond prices and raises yields. This means the U.S. government will have to pay more to service its debt. This could lead to increased interest rates across the economy, raising the cost of mortgages, student loans, and other forms of credit for everyday Americans. However, the most significant threat lies in the erosion of trust in the U.S. financial system. U.S. Treasury bonds have long been considered the safest investment in the world. If that trust erodes, it could lead to a broader loss of confidence in the U.S. economy, sending shockwaves through global markets. If foreign investors begin to look elsewhere for stable investments, the U.S. could face even greater financial challenges. The birth of a new financial order: China's sell-off of U.S. Treasury bonds, isn't just a financial adjustment. It's a blueprint for the creation of a new world order. By diversifying its reserves and building alternative financial systems, China is laying the groundwork for a multipolar financial landscape. This could lead to a more balanced global economy, where emerging markets have greater autonomy and trade becomes less dependent on a single currency. However, this new financial order is not without its risks. A fragmented financial system could lead to greater volatility and create new power struggles. For the U.S., this shift is a wake-up call. The era of unquestioned dominance may be coming to an end, and the question is whether the U.S. can adapt to a world where it is no longer the sole superpower. China's strategy is ambitious, but it faces significant challenges. Building a global financial network that can rival the U.S. dollar requires trust, infrastructure, and international cooperation. But with initiatives like the Belt and Road Initiative (BRI), the expansion of BRICS, and its investment in gold, China is signaling its intention to lead in the new financial landscape. The future of the U.S. economy and global power stakes are incredibly high for both the U.S. and China. The U.S. economy has been resilient for decades, but as China and other nations move away from the dollar, the U.S. will have to adjust to a world where its economic influence is no longer guaranteed. Will the U.S. economy be able to withstand this pressure, or will it struggle to adapt to a new world order? The answer will shape the future of global finance, and the world is watching closely as these shifts unfold. In conclusion, China's decision to sell U.S. Treasury bonds is far from just a financial adjustment. It's part of a larger strategy to shift the global financial landscape. As China continues to reduce its reliance on the U.S. dollar and build alternative systems, The world may soon enter an era where the U.S. is no longer the dominant economic superpower. The question is, how will the U.S. respond to this challenge? And what will the future hold for global finance?